Inflation down from its peak in 2022, but it's been rather stubborn so far in 2024. This morning's hotter than expected CPI print weighing on markets and pushing out expectations for the Fed's timing on rate cuts. But it's not all bad news. Yahoo Finance's Rick Newman joining us now with the silver lining in this report. What was it, Rick?
Goods inflation, stuff, products. Goods inflation was only 0.6% year over year, and it has been below 1% for the last 6 months. We're basically, inflation in goods has disappeared. Now, a lot of people will complain and say, yeah, but many of those price increases that happened over the last 2 or 3 years, those are still there. And that is mostly true, although there are some things that are actually declining in price. We have seen declines in the cost of used cars and trucks, for example, electronics going down, a few other things in the 28 categories I've been tracking since 2021. But the other good news here is that earnings are now rising by about a little over 4%, and compared with goods inflation at just 0.6%, that means people are catching up. So the typical paycheck buys more in terms of products. And this basically coincides with everything we know about why goods inflation got as high as it did anyway. The peak was 14.2% year over year, and I think that was in 2022. And we know why that happened. I mean, it was the COVID supply chain snafus. It was everybody was stuck at home ordering stuff from Amazon and Walmart online. There wasn't enough stuff. So naturally, prices went up. Well, that has basically reversed. So we basically only have two types of inflation left where we're trying to solve this problem. One of them is rent, which counts as a service. And then the other one is a real outlier that we've been talking about a little bit lately, which is auto insurance, up 22% year over year. So those are the two problems we have to deal with now. Everything else is basically falling into line.
Rick, another metric that stood out to me, though, was that, it was gas prices, Rick. I mean, that really helped drive this hotter than expected print we got. It's hard to imagine another data point, Rick, that has such an impact on how people feel about the economy and inflation and the signs they see at the local gas station. What did you make of that?
I mean, gasoline is erratic. We know that. That's why it's not included in the so-called core inflation measure. This doesn't tell you anything about what's happening in the underlying economy. The Fed, I don't think, worries that much about gasoline prices, at least at the levels they're at now. I mean, look what's pushing up gasoline prices lately. It's not anything about the economy. It's a war between Israel and Hamas. It's a group nobody ever heard of until 6 months ago called the Houthis in Yemen that are trying to sink cargo ships in the Red Sea. So that's, and that just follows what we've been seeing in oil prices, now close to $90 a barrel. Now, if you're President Biden, all of this matters a lot because gasoline, of course, it's less than 3% of what the typical family spends every month, but it just has an outsized effect on confidence. And these numbers are not going the right way for President Biden. I mean, I'm sure he wished that by now, the inflation rate would be getting close to what the Fed wants at 2%, and it's not. It's going the wrong way. And Biden is not going to get the interest rate cuts that he would really love, it looks like, in June, or perhaps not at all in the first half of this year. So they might come later in this year, but there's a growing chance there won't be any rate cuts this year, as we've been talking about all day. So that's heartache for President Biden for sure.
Rick, thank you. Appreciate it.